us. That being said, ladies and gentlemen, I hope all of us are also geared up for another very interesting fireside chat coming your way. This is all about building the Indian digital services ecosystem. And we have an Indian internet pioneer who is joining us. We're about to get the fireside chat started in just a couple of minutes. Kindly bear with us. Please be seated so that we can invite both of our speakers on the stage and indulge in this very, very thought-provoking discussion. That being said, ladies and gentlemen, let me also quickly inform you that this particular fireside chat is being spearheaded by none other than Mr. Manish Vij, who's the managing partner of Smile Group. In fact, he's one of the founders of leading companies in digital media and advertising industry. And joining him this afternoon, we have one of the pioneering stalwarts, someone that we look up to across the generations, and for the work and for the entrepreneurial spirit that he always holds. We have with us none other than Mr. Sanjeev Bikhchandani, founder and executive vice chairman, InfoEdge. So please put your hands together to help me welcome both of our speakers on the stage, Mr. Sanjeev Bikhchandani and Mr. Manish Vij, to spearhead this very important fireside chat for us. And thank you very much, sir. Thank you, Manish, for joining us this morning. Thank you very much, sir, again.
Hi. Honestly, sir, I see these sessions with Sanjeev as honestly my own learning sessions more than anything else. Last time you were on this stage, I got this honor to host you for this fireside chat. And Sanjeev has been my mentor since like 20 years now. Each important decisions that I've taken, of starting up or exiting, I've always reached out to Sanjeev for this. So this session, today's session, which is Bridge Over Troubled Waters, it's an apt time and with an apt person, because I think, sir, you would have seen what this, 4 or 5 downturns, probably?
So I quit my job and became an entrepreneur in 1990, and we launched Naukri only in 97. So पहले 7 साल मैं कुछ और चीजें कर रहा था. Must be sixth or seventh downturn, maybe fifth or sixth. I forget. But 5-6 तो हुए हैं.
Right, 5 तो हो गए, बिल्कुल. And so how we have structured this session is. So Bridge Over Troubled Waters is a very, so we all go through downturns and so mostly this could be targeted to entrepreneurs, but we will probably have a lot of people listening to you here and on the web, which are entrepreneurs, people who are working as leadership positions. So I think this session is very relevant for people in general and as probably principles of life, more than just principles of running businesses. As I would like to divide this session into 2 phases. One, how to not get to the troubled waters. And secondly, how to, if you are in the troubled waters, how to manage it. So we'll try and divide this session to you. And the first division, of course, I was reading about Charlie Munger, and the famous quote is, let's try it. I will potentially not go there where I know I have very high chances of die. So the idea really is that if you know things that could probably get you to the troubled waters, let's try and avoid that. So we'll take the first part of this session, sir. I would point down to you a few things that I believe are areas that people should really have principles, and then I would like you to kind of expand over that and take examples. The first and foremost brings me to corporate governance and governance in general, honesty and governance in general. So do you think it's an important, yeah.
Look, I think for any company to succeed, for any entrepreneur to succeed, you have to be able to create trust across the table with your co-founders, with your employees, with your customers, with your investors, with the government, with the tax authority, everybody. Now, you cannot create trust on a sustainable basis by being dishonest, because sooner or later you'll be caught out, right? So apart from the ethical and the value-based thing, which I think is very important, it's a very practical thing. You can't succeed by being dishonest on a sustainable basis. And therefore, it's a good idea to be honest, apart from the fact it's the right thing to do. So I think corporate governance is really important, and corporate governance really begins and ends in the founder's head. You can have all sorts of trappings around you, independent directors, statutory auditors, internal auditors, you know, all sorts of things. But ultimately, a determined crooked founder can find his or her way around that, and we have seen that happen in the past, both in private and public markets, right? And therefore, it's important that the founder thinks this through and understands the importance of true and fair accounting, speaking the truth, giving bad news early, not window dressing the numbers, not disguising the unit economics by putting something out, below the, the CM1, CM2, CM3 is all rubbish, right? Those are all methods to disguise the fact that you're not profitable. Such bol do. It's much easier.
Mm-hmm. And मेरे को ऐसा लगता है sir, it also combines with sometimes between storytelling, because as an entrepreneur and generally everyone is also trained to be a salesman from a storytelling standpoint to either investors or employees or people in journey they work with. So I think it's a thin line between storytelling and being dishonest.
I think my first job was in advertising.
Yeah.
In 1984, straight out of college, in a company called Lintas.
Right.
And the first thing we were told is advertising is not telling lies. Advertising is telling the truth well. So if you are selling, please sell well, but tell the truth. So sell the truth well, but ultimately you're selling the truth.
Nice. This is great. The famous things comes between profit and growth. And I would love to, in today's environment where growth is the ultimate truth, and high growth, of course, and there are reasons for higher growth. There are business models that actually survive on higher growth. How do we balance out? You have built profitable businesses, but you have invested in businesses which have actually looked at growth most importantly and then profit. So would love to hear.
Yeah. So look, Naukri grew fast and grew profitably.
Correct.
We were fortunate. We had a business model. We had hit a hot button with the customer, both on the job seeker side and the recruiter side. We were market leaders. And therefore, we had hit a virtuous circle which really worked for us. And therefore, we could be fast growing and profitable at the same time. Not everybody's like that.
Correct.
Right?
And not every business model is also like that, probably.
So I'll tell you one thing. If you're in a network effect business and you have a superior differentiated product and a network effect going for you, you will hit that flywheel of fast growth and profit at the same time.
Okay.
Okay? If you haven't, maybe you need to work harder on understanding the customer better, on figuring out the unsolved problem, innovating in a defensible manner to solve that problem, and then you will find that maybe you can grow fast and profitably at the same time. But in this environment, I would prioritize profitability over growth, because fast growth without profitability means you need lots and lots of money coming in from external investors, and if you don't have access to that capital, you will run into trouble. You will build up large costs, large overheads, and then if the money runs out, you're in trouble. So I would say, don't chase valuation, chase profitability and survival, unless you have access to capital, or you figured out how to grow fast profitably.
Understood. But you famously also said, sir, that companies actually go wrong when they raise more capital than required. But what about raising capital whenever there is availability? And how does one entrepreneur or people deal with it?
So look, first of all, you must figure out how much capital do you need.
Understood.
Right? So at least try and raise that much. If you can't get that much, then change your plans so that you need less. Okay?
Right.
But still, you're building a business. You're hopefully building a business for 10 years, 20 years, 30 years, right? Because business 5 साल में नहीं बनता है.
Bilkul.
Right? Then maybe you want to at least raise slightly more than you need, because insurance, rainy day, something goes wrong, 2 साल बाद पैसा नहीं मिला, चाहिए अगर और चाहिए, right? And then obviously it has to be available, right? Now, it's a combination of these three things. You may also be stuck in a situation where competition is raising.
Exactly.
And if competition is raising, you have no choice but to raise. And several of our portfolio companies have had to do that. And that's why they moved from being low burn companies to become higher burn companies chasing growth, because competition was raising and chasing that, and that was the flavor of the month then, as far as investors are concerned, right? And that's fine. You don't have a choice, really, you know. So I would say, but I would say that companies that tend to raise too much money too soon, too easily, tend to spend it suboptimally. You know, money burns a hole in your pocket if you have too much of it. You become careless in throwing it around. You build up costs and overheads and salaries and marketing expenditure, and you don't focus enough on unit economics. So what I always tell young entrepreneurs, people that are starting out, early stage, is that the customer's money is better than the investor's money. Right. Because if you are getting the customer's money and you're getting it repeatedly from the same customer, then chances are you are creating value for that customer. And if you're getting that money at a price that's higher than your cost, then chances are you have a viable business, so long as you can get enough customers.
Is it
and
mostly...
let me just complete this.
Yeah,
right?
sure.
And अगर आपके पास customer का पैसा आ रहा है on these terms, आपके पास investor का पैसा जरूर आएगा. You may say no, we don't need it, but the investor will want to invest because investors love to invest behind companies that are getting customer money, and actually companies don't need the money, right? Because that's the safest investment for them, right? But if you get the investors' money first, right? You may or may not get the customer's money. There's no guarantee, and there's no guarantee of viable business because the customer is not going to do you a favor. Yeah. The customer will give you money the second time only if your product worked the first time, right? And getting the investor's money is about making a good PowerPoint. Getting the customer's money is about a good product, a good offering, a good value prop, a defined need, unmet need, and then good communication and delivery. That's much harder, but that is much safer if you achieve it.
It's safer. 100%. Is it more true to B2B businesses or even true for B2C businesses?
Well, how would you describe Naukri?
I would say you are a hybrid because your revenue comes from B2B versus you are facing the consumer.
Yeah. So, and what is Google?
I would still say
Same,
it's
right?
a hybrid, right?
So listen.
But let's say, I don't want to name, but it could be, let's say, high growth companies like, let's pick up a industry vertical, let's say e-commerce or fast delivery, like 10-minute delivery, because they're also taking money from customers and they're creating newer categories of 10-minute delivery.
Yeah. So there are some business models which will require substantial upfront investment and burn before they get to profit, if they get to profit.
Yes, okay? Exactly.
If you're building out a network of delivery, and you're operating on 10, 12% margin, right? And you're stocking inventory, right? There will be, capital required. But your execution has got to be rock solid, and to get efficiency. So, what we say internally, there are businesses that work on the left-hand side of the decimal place.
Left-hand side?
Of the decimal point.
Okay.
And there are businesses that work on the right-hand side of the decimal point. Right? What we classify as left-hand side is that margin mote hain. So Naukri, 93% gross margin. Right. There is zero variable cost. Right. Only variable cost is sales commission. Right. There is no variable cost. It doesn't cost you money to save one extra resume in Naukri or put one extra job on Naukri. Right? The only variable cost is sales commission. So Naukri, 65% EBITDA margin. Naukri operates on the left-hand side of the decimal place. We got such fat margins. Right. I mean, galti bhi ho gayi na, 5-10% ki. We're okay. I mean, profit will go down, but we're okay. Survival is not a question. Yeah. Right? Then there are businesses that operate on the right-hand side. People always ask us, hey, Naukri is so big, why don't you start a staffing business? Okay, where you supply people who are on your rolls, but they're working in some other company. Yeah. And we always say, we don't have a competency in operating a business on the right-hand side of the decimal place. Because in those businesses, your margins are 14%. Right? If your bench goes higher than X by 1%, 2%, you go into a loss. We are not that capable, hamari kabiliyat nahi hai, that we can be so precise in managing cost, efficiency, and margins, कि 1-2% इधर हुआ तो हम loss में चले गए. We are not that good. Right.
And you would rather invest in those businesses?
No. So we're not invested in a staffing business ever.
Right.
Okay. The point is a business is a matter of policy.
Right.
Gross margins can be very high.
Yeah.
Once they reach a certain size and scale, and once competition sort of reduces a bit.
So there are businesses which can be capital efficient at the starting of their businesses, and there are businesses that ought to have a lot of investments going in to kind of, because they're creating categories or creating market categories. And
Naukri also created a category, but उसमें competition नहीं था.
हाँ. Right.
और हमारे पास पैसे नहीं थे.
Right.
Right. So we had no choice but to break even.
Got
and so we broke even. When there's no choice, ना आप बहुत चीजें कर सकते हो.
Understood. I fully agree. So we talked about corporate governance, we talked about profit versus growth. Talk about some culture around the leadership team, because again, very high growth businesses need a lot of culture development in the leadership team, at least. People talk about purpose, people talk about mission, vision, etc. Can you talk about that?
When we started, I'll take our own example.
Yeah.
We did not have a culture strategy. We did not have vision, mission, kuch nahi tha yaar. We simply got 29 newspapers. This is 97, April 97. There are only 14,000 internet accounts in the country. On 14,000 internet accounts, you can't have a vision. Okay? We thought it was a nifty small idea. We'll put up jobs from newspapers around the country. एक बारी job डाल दिए, तो traffic आ जाएगा.
Right.
एक बारी traffic आ गया, तो अगली बारी we'll charge those companies.
Right.
Right? And that's how it panned out. Right? Our goal was, so I was running a small company out of my house. We were doing salary surveys, some databases. साल का 12 lakh turnover था. Company break even हो रही थी, मैं salary नहीं ले रहा था. I couldn't take a salary because company couldn't afford to pay. Right? And I said, अगर हमको 1000 कंपनियां मिल जाए हर महीने, जो 500 रुपए दे दें, तो एक जॉब लिस्ट करने के लिए, तो महीने के 5 लाख हो जाएंगे. तो साल का 60 लाख, तो company grow 5x.
Yeah.
Right? If you can do this in 3 years, it will be big victory.
Right.
वो vision नहीं था, वो sales target था.
Right.
तो शुरू में vision नहीं होता है. Right? शुरू में sales target होता है. Right? अगर vision होता है पहले ना, तो you spend too much money. अगर sales target होता है, so you break even first year.
Nice. So capital efficiency के ऊपर आप काफी, मतलब I think you're mostly talking about profitability, capital efficiency, corporate governance. These are the 3 broad things that you've covered so far. But let's switch to the times.
Just go back to your childhood years, when you were growing up.
Yeah.
What did your parents teach you?
Yeah.
पैसे बचाओ,
Right.
खर्चा कम करो.
Right.
Live within your means.
Right.
So those 3 values are back in fashion. A few years they weren't because there was too much money in the environment.
Yeah, so I was saying, just switch to this time where hundreds of, just about a year back or 2 years back, when there were $50 million or $100 million, or for SaaS companies, $10 million were easy to raise, and people had money. So in those times, so that we don't get it wrong, what culture should we have, right? For example, let's say if there's a SaaS company, I only need 2 million, but investors gave me $10 million. Now what?
Don't spend it.
Don't spend it.
Okay? If somebody's, don't spend money, don't spend more than you need to spend.
Got it. So your culture needs to still be capital efficient.
So, see, क्या था कि, most of us in this room are from middle class background, right?
Yeah.
Right? So salaried parents, not so much money at home when growing up. Right? Just live like that, pretend you're the same, and don't spend that money. So raise the money, but don't spend it.
Understood. Do you think it's okay to raise secondaries, very large secondaries by entrepreneurs at a very early stage of the...
Personally, I don't think so. I have tweeted about it. You may have,
okay.
May have seen my tweets.
Yeah.
So when we raised money from ICICI Venture in April 2000, agreement clearly लिखा हुआ था कि you can't decide your salary, we decide your salary, because you can't get rich on our money, so you get a modest salary. I was okay with that. उस समय मेरी salary 0 थी, so any improvement is good for me, right? Second, you can't sell any shares without our permission, and that permission will not come, because in order for you to get rich, you have to make us rich. And they called it alignment of interest. And we will get rich when we sell our shares, not when there's an up round. So till...
No mark to markets.
No mark to markets. I mean, mark to markets book mein hota hai, but you can't in cash. And they were just clear about that. And they called it alignment of interest. And it worked out.
Got it. And so these were all bull market times, and when large...
See, what has happened since 2008-9 is that the Fed spent its way out of trouble anytime there was trouble, right? For the next 14 years. Or 13 years, okay? And this massive increase in liquidity found its way all over the world. Public market, private market, all asset classes, right? And now that they've reduced the size of the balance sheet and they increased the interest rates, you're seeing the flip side play out.
And so people and companies with these kind of values will sustain.
It's not just values, yeah, it's about, see, what costs have you built up? What's your business model? If you're selling below variable cost, what will happen when you raise the price? How much cash do you have in the bank? Are you able to raise more money? There are several variables, but in general, it's a good idea to have a good unit economics, enough cash in the bank, right? And a frugal mindset.
Can you give us an input around, let's say, investors' role? For example, I have seen businesses in my portfolio companies, and I'm an investor side now. When investors say, go get a good growth, second, we have to raise another round, just go capture the growth. How should the entrepreneur behave in the boardrooms? Because boardroom becomes the most important aspect in entrepreneur's life. So, any advice on that?
So listen, to the founders, it's your company. Right?
It's your?
Company आपकी है.
Right.
Because आपको 30 साल चलानी है. Investor चलाएगा 5-7 साल में. Right? Now, while the investor is on your cap table, obviously they're very important, and you have to look after minority shareholder interests, and you have to be ethical. But understand fully well it's your problem. It's your company, and ultimately it's your problem and your solution. So if you're not comfortable with something, say so. Right? Because ultimately, यार investor के पास portfolio है. अगर आप fail हो गए, कोई और succeed, he's okay, he succeeded. आपके पास portfolio नहीं है, आपके पास एक ही company है. उसी को कामयाब बनना है.
Yeah.
So you have to be more responsible and the most responsible person on the cap table.
In fact, I learned that you also famously said that some investors are probably think it's like their dream to run the company by using the investor.
So I think we were very fortunate. We had ICICI Venture as an investor. There was complete role clarity and role consensus.
Right.
They knew they were investors. They would suggest, not impose. We knew we were the founders and we knew what to do. So it was a great partnership.
Right.
So I think it's really important that founders and investors have role clarity and role consensus.
Right. So, now before we move to the other side when somebody is already in the troubled waters, so Sanjeev talked about, corporate governance, which starts at the founder's head, profit versus growth in terms of being capital efficient, a profit mindset. He talked about culture first or sales target first. I think I really love that. Use of founders' time in terms of making the investors rich first versus making us rich first, and the role clarity between investors and the entrepreneurs. I think these are some great pointers, in my opinion. I'll keep that in my mind also, that companies should actually work on so that they don't get to the troubled waters. Sanjeev, now very important, some people or some companies have got to the troubled waters. I know a lot of companies and portfolio companies as well, some of them, where it's very tough to raise their next round. Companies short of cash. What are some of the areas that he should look at?
Look, cut cost fast. Now, some of these cost-cutting decisions are painful, right? But if the company is going to otherwise go out of business, okay, and be a messy shutdown, it's a good idea to anticipate stuff and cut cost fast. If you somehow get to break even, at least you'll survive and you'll live to fight another day, right? And examine your costs very well, examine your unit economics, your overheads, your marketing kharcha,
Right.
your salary bill. But founder should lead from the front. अगर आप लोगों की तनख्वाहें काट रहे हो, लोगों को जाने दे रहे हो, first make your salary 1 rupee.
Right. Right. So
And
cutting
so
costs.
you can explain to your people, look, we are going through tough times, and I'm cutting my salary to 1 rupee, right? And we'll take it from there. And yes, some people may have to be let go, if they have to be let go.
Right.
But you've got to downsize with a human face, if you're downsizing.
And is it okay to think about, maybe the business model doesn't allow you to kind of just continue. Is it okay to pivot, okay to shut down, okay to,
Yeah, so there is no one size fits all. Obviously, each situation is different and each company is different, each business model is different.
Right.
But, if you just have no time left and there's no money, it may be that you'll shut down. But that may also happen.
Right. Right. Understood. And let's say the biggest problem comes here when business is running. Some businesses actually, even if you cut growth, cut down profit, probably competition just takes over because they have cash, and becomes a very
that becomes a problem unless you innovate and do something different and build a moat and can somehow find levers of growth that don't cost that much money.
nice. Got it. So guys,
But just to tell you something,
yeah.
we had raised 7.3 crores in April 2000, and we had a competitor who had raised 28 crores at the same time. Right? We survived and we grew. The question is how good you are at execution and how good you are at innovation, and do you have that customer insight? And that's what worked for us. So it's not impossible.
No, I can absolutely feel that, because we raised, in our media business, we raised 12 crores and our competitor raised almost like 300 crores. And as time would have it, because we continue to save, and time has have it, we bought them out. So,
Exactly.
so the principles and the value system actually worked in our favor as time was ahead.
Yeah, you see, it's about focus on the customer insight, innovation, execution, and while capital is important, if capital is your only strategy, you have a problem.
Right. Guys, thank you very much. The time's up. I will tweet all the points because this should remain in my, I should actually keep going back. I was chatting with Sanjeev sir yesterday, and I was saying this is like Sanjeev's almanac. These points are very, I would say, very precious. It's 33 years of his experience and combine a little bit of mine. So I will tweet them all with Sanjeev's permission, and just let's keep them as very precious points in our journey. Thank you, sir. Thank you very much. Thank you.
Thank you very much, Manish, and thank you very much, Mr. Bikhchandani. If I could request you both to please come together for a quick photo op. And every session with Mr. Bikhchandani is nothing short of a masterclass, and I think, yes, we'll eagerly be looking forward to those tweets from Manish as well, considering all the pointers that have been covered in the session.